Well, if the stock market was a family, large caps would be the adults, while mid caps would be the teenagers, and small caps would be the little kids. And on today's ETF battle, we've got a sibling rivalry between small caps and mid caps. It's the SPDR S&P MidCap 400 ETF, that's ticker symbol MDY, going up against the iShares Russell Small Cap 2000 IMW. Who wins the battle? Stick with us to find out. Welcome to another thrilling episode of ETF Battles. I'm Ron DeLegge. It's great to see you. Even though large cap stocks like SPY and QQQ and DIA get most of the daily headlines, lest I remind you that it's the ETFs that track mid cap and small cap stocks that have outperformed during the past year. And that makes today's matchup between MDY and IWM all the more timely. Now, quick shout out to our fans, Shubham Garg, Icus T007, Mary May, Michael W., Impression Grafica, Sunny Raj, Tactical Veterinarian, love that username, Rigo, AC, Ryan Leash, Ronald Tam, Sam, Dave Schmarter. I mean, the list goes on and on. We love you just as much as you love us. And as you know, season 2 of ETF Battles is now in full swing, and we're doing more double, triple, and quadruple headers because of a simple formula that has taken us hostage. Too many ETFs plus so little time equals more ETF battles. If you'd like to see a certain matchup, give us your ETF ticker symbols in the comment section below, or you can hit us up on our Twitter feed at ETF Guide. Make sure the ETFs that you send us have a minimum of 1 year performance history, and don't forget to include your ticker symbols. You can also download a battle recap summary of today's showdown. Just hit the link below in the description section. Judging today's matchup, we've got Cinthia Murphy at ETF.com and Dave Kreinces at ETF Portfolio Management. Cinthia and Dave, always great to see both of you. Welcome back.
Hey, Ron. Hey, Cinthia.
Hey, guys. Thanks for having me again.
So the 4 battle categories for today's matchup between IWM and MDY are cost, exposure strategy, performance, and then the mystery battle category. That is our Agatha Christie favorite. And it's the one category where you, the judges, get to come up with that one factor or maybe several factors to support your analysis. The mystery category is unknown to all except the judges themselves. Well, I've got the scorekeeping chores and my scorecard is ready. So let's get started with our first category, which is cost. Cinthia, you're up. Who wins the battle?
IWM, Ron. IWM is cheaper in terms of an expense ratio. It's 19 basis points, which is $19 per $10,000 invested in a portfolio of 2,000 stocks. It's really competitive. It's cheaper than MDY, the mid-cap sibling. And it also is important to note that IWM trades almost on average $6 billion a day at penny-wide spreads. So it is cheap to trade, it is super liquid, and it has a lower expense ratio.
Thanks for that strong start and that convincing argument, Cinthia. Dave, how do you see it in terms of cost between these two ETFs?
You know, small caps versus mid caps almost feels old fashioned. Tech has dominated for so long, these ETFs seem old school. But we know that old trends come back in vogue. On cost, these passive growth index ETFs both charge roughly 20 basis points. And while I agree with Cinthia, the cost difference for me is not material. So I'll call the cost category a split decision.
Thank you, Dave. Next up is the exposure strategy. You're still up, Dave. How do you see it shaken down between MDY and IWM?
For exposure and strategy, small caps give you more healthcare exposure and higher volatility. But overall, the exposure and strategy differences are often not material. So I call this category another split decision.
Look at that. 2 split decisions in a row. I think this is a first for you, Dave.
I'm making your day.
Cinthia, how do you see it in terms of exposure strategy? Do you agree with Dave's analysis?
I don't. I actually like MDY's exposure better. I do agree on the healthcare element, but I actually think even then, IWM has twice as much healthcare as MDY, but within that segment, IWM has 10 times as many biotech stocks, for example. than MDY does. So it's an interesting difference. But in the overall, I think mid caps are a more interesting spot. They tend to perform, a little bit less volatile over time. I like that you're not dealing with the tiny kids that you don't know if they're going to be profitable or not a lot of times. And you're also not dealing with your, slower growing larger caps. So I think mid caps are just a sweet spot in terms of exposure.
Thank you, Cinthia. We move next to the performance category. And Cinthia, you're still up. How do you see it in terms of performance?
The performance to me was tough on this one because, State Street last year did this a really interesting, I'll shout outs to them, look back at mid caps, and was really interesting to see that during the 97 Asian crisis, the dot-com bubble, the 2008 financial crisis, in all those aftermaths, mid caps, not only they faced a smaller drawdown during it, but they recovered much faster than small caps or large caps, which I found fascinating. So mid caps in terms of historical performance win, but in the near short term, over the last year to date, since the March 23rd pandemic low, IWM has outperformed. So it's a short term versus historical. If I have to pick one, because I like conviction, Dave, I would pick MDY just because the historical performance I think is really interesting. Shorter term, IWM would win.
Thank you very much. I've got you down for MDY. And also thank you for not doing a split decision. You're making my job a lot easier. And you're also helping me avoid criticism by Dave. He loves to criticize me and poke fun at me about all my split decisions. So we move next to you, Dave, in terms of performance. How do you see it shaking down between these two ETFs?
I don't think of it as criticism. I think of it as just thoughtful reflection. On performance, the long-term returns from small caps and mid caps are close, but the short-term momentum, as Cinthia mentioned, does favor small caps. If we zoom into the past 6 months, small caps strongly outperform the NASDAQ 100. In fact, our new wildcard ETF, small cap 3 times, symbol TNA, actually delivered 147% over the trailing 6 months. So I give the performance win to small cap 3 times TNA, which we currently own. And in its absence for this battle, I give the win to IWM. And in full disclosure, we also have been trading IWM and we do not have positions in MDY.
All right. Thank you very much, Dave. We've arrived at the mystery battle category where our judges can pick that single factor or maybe multiple factors that make their argument that much stronger and solid and clear to all of us. So Dave, what's your mystery battle category and who wins it?
Well, it's no mystery that position weighting is super important. At ETF PM, we would consider allocations up to 30% in either IWM or MDY in our aggressive client portfolios. So for me, the position weighting category is another one of Ron's favorite split decisions.
All right, I got you as a split on and that's 3 splits, Dave, so far. So I'm keeping track of you, buddy. Let's shift to Cinthia. What is your mystery battle category and who wins it between MDY and IWM?
I better win this battle. Let me just say it because, you got to take a pick. So my mystery category is a little fuzzy because I'm going to go with ESG ratings. So there's not a universal metric here, and that's what I mean by fuzzy. Different groups that evaluate ESG ratings evaluate differently. But the one I used actually ranked, if you broke environmental, governance, and social, or social governance, MDY scored higher in each of those categories, which gave it a higher aggregate score in terms of ESG ratings. That matters if you believe that companies that rank higher in ESG, like sustainability, good corporate governance, that kind of stuff, they tend to have a better chance of outperforming long term. So if this is true and it works long term, MDY looks better positioned to outperform long term than IWM. So I'd go with MDY in my mystery category.
Very good. We got you down for MDY for your mystery category. Thank you very much, Cinthia. Now we shift to your overall battle winner between IWM and MDY. So how do you recap today's matchup, sibling rivalry between these two ETFs, Cinthia?
You can't beat small caps in the price, IWM. It's a part of the market you can't ignore for sure. But in the overall, I like the mid-cap space. I like the mid-cap space as an investor. I like that's a smoother ride. I like that they're resilient in times of difficulty. And they even score high in ESG. So win-win all over.
So Cinthia chooses MDY mid-caps as her overall winner. Dave, this is your final chance to weigh in. Do you agree with Cynthia's final analysis of today's battle winner?
You know, Ron, to recap this old school matchup, it almost looks young again with small caps making a big run lately. While I do generally prefer trading the wildcard ETFs, TNA and TQQQ, I give the win in this battle to small cap ETF IWM for stronger short-term momentum.
All right. Thank you very much. And so we got you down, Dave, for small caps. And according to my battle scorecard, this is a split decision with Cinthia favoring mid caps in nearly every category, with the exception of cost, where IWM, in her view, won that particular category. And as far as Dave, we got 3 split decisions out of Dave, but in the end, he chose small caps as his winner, with his wild card preference being TNA. And I think each of you made some strong points. Some key takeaways from today's program. I think each of you made some great points, but this is an area that often gets missed in investor portfolios, which many tend to be very heavily weighted towards those large cap or mega cap names, which again, everyone knows, everyone's heard of. And those are the ETFs and stocks that are the biggest and also tend to get the most attention. And often it's those mid caps and small caps that don't get included inside the portfolio, and they are important parts of the equity market. So MDY and IWM, you can't get much better in terms of exposure there. And then if you're looking for some tactical exposure, as Dave mentioned, to small caps, TNA, and you know the rule for leverage: control it, have context, and also don't use leverage unless it's a strongly trending market, trending in the same direction that you're trading in. So that's how you do it. Well, thanks again, judges, for weighing in. Great job in breaking down today's old school matchup of small cap versus mid cap. Well, that does it for another episode of ETF Battles. If you'd like to send us a ticker symbol, tell us what matchups you'd like to see, do that in the comments section below. You can also download a battle recap. Again, hit the download link. You can also send us your ETF battle requests on our Twitter feed at ETF Guide. Thanks again for watching. Be sure to subscribe to ETF Guide TV. I'm Ron DeLegge. And until we meet again, watch the battle before you invest right here on ETF Guide TV.